What's up, traders? Welcome to the very first episode of Skycast, the official BluSky Trading Podcast. It's a new year. Why not a new podcast? We've been working behind the scenes aggressively on this, and I'm so excited to get this out there. Now, this show is going to be about real market insights, real conversations, and who else would be better to have these conversations with than our BluSky coaches. So welcome in. And for those of you that don't know me, I'm going to be your host, Justin. Every week, I'll sit down with your BluSky coaches, and we will break down the market and answer the questions that every trader wants to know. So, welcome in, guys. And since this is the first episode, and some people might not even be with BluSky yet, I figure, why not have our coaches introduce each other? So, let's just start with you. Coach Matt, maybe how long you've been trading, what got you into trading, and what instruments you like to trade, or anything you want to do.
You know, Coach Matt, obviously, been trading for about 20 years now. Started in October of 2005. And honestly, like many people back then, found myself talking to an individual who had traded before. And I had never done it, was curious. I kind of grew up in real estate. My father was a general contractor in real estate. So I was always interested in asset classes in general. But this dude's talking about a call option, and I'm just completely obliterated when it comes to understanding anything he's talking. He's talking Greek, literally, and I'm just sitting there and don't even understand broken English very well. And I'm just like, I have no clue what you're talking about. But, man, just the thought, watching him do what he was doing, I was just like, I need to know this. And so went to a class called Master Trader, started learning the basic concepts of the market, and honestly was hooked from that point on. As a trader, I like to be a well diversified trader. I love different time frames. I love different asset classes. Obviously, a lot of people at BluSky are in the day trader type arena, but I think having action in every time frame is important. And I do categorize myself as a swing trader. I trade a lot of options, trade a lot of futures.
What got you into futures specifically? Do you remember?
Day trading specifically and wanting to, Forex, I got into Forex first is what I got into. And I started day trading Forex back in 2010. And I day traded Forex for about 4 or 5 years, before I kind of shifted a little bit, longer story, but I shifted a little bit more to options and cash flow, and then really kind of started rocking futures after the pandemic. So I'd always known futures. I was just more of a Forex guy, because day traders will gravitate to the leverage environments of Forex and futures. But honestly, with zero interest rate policy for 10 straight years across the board with every major country, futures kind of seemed a little compelling. And plus I love commodities, and commodities live in the futures arena. It was an easy transition going from Forex to futures, but it did take me a while. I was a trader for a good 15 years before I ever even started doing futures.
Oh, wow. Yeah. Okay, cool. I like that joke. It was Greek to me about options. That was a good one. All right. On next to Coach Riz, who streams every morning for us. Coach Riz, what's your background?
Background, about 6.5 years of trading. Started off in crypto, moved over to the options trade, and stuck in there for a while during the meme phase, and then decided I was missing the after hours action, and I wasn't liking the swing trades. So I felt it was best for me to move over to futures so I could be able to participate in the after hours market. And from there, nowadays it's a mixture of options as well as future trades.
Oh, very cool. Very cool. Nice. And last but not least, Coach Becky.
Hey. I joined in the spring of 2021, and I was a longtime nurse, but then found myself with time on my hands, and so I started hearing about the stock market and learning during all the things with the crypto market and the GME squeeze and all the hubbub. I was like, what's going on? I thought I would just learn a little bit here and there and see if it interests me, and I fell madly in love with trading and just kept hunting different resources, finding different educational programs until something really started to stick, speak my language. I learned enough to know how to take a good trade. And I tried to start with swing trading because they say that's, lower risk. It's a better environment to learn, but I am kind of a more fast-paced person. And so futures definitely is where I just kept coming back to. In the beginning, you're exposed to a lot. I learned swing, options, and futures. And futures feels like my most in sync with my personality, and then options as right along in there as well. So I do trade both. But I feel like it's not even a morning Monday through Friday if I don't trade futures, at this point. So yeah, I'm creeping up on 5 years now, and I'm very excited. I'm continuing to learn, and I really, spent a little time digging into my psychology as part of how I, got past the hump of only being a break-even trader. Once I started making profits is when I really, prioritized my psychology. So that's just a little bit about it.
Very cool. And for those of you who don't know, Becky does a weekly psychology lab in the BluSky Discord. And I got to tell you, it is gold because, as we know, psychology is about more than half of trading. If you don't have good psychology, you're not going to be a successful trader. So make sure you turn into that. And it's funny you guys all mentioned options before futures because everybody I talk to, it's the same thing. Options to futures, and they either love futures or hate it. So that's great. Now that we've met the coaches, let's get into the market. All right, welcome to the first segment of the podcast. This is called Market Watch, where we zoom out and talk about what future traders should be paying attention to this week. This could be economic data, political climate, or earnings, or anything that's going to shift the market that we should be paying attention to. So, coaches, let's think big picture. What are you paying attention to next week? And Coach Matt, let's start with you.
There's a lot going on next week, and I think it's a very interesting conversation about what's the most important catalyst to be had this coming week. When I look at the earnings landscape and the economic landscape, the political landscape, all of them are kind of hot this week. But I'm going to go with the kickstart to earnings. Honestly, and it's not to suggest that inflationary data and the tariff continuation and the geopolitical conversations are not important. There's a lot of important data coming into the market this week. I just anchor on the real stories in the market. And as a day trader, all the data next week in the market could provide some volatility, and you could certainly enjoy that volatility as a day trader. But to me, it's really about, the bigger picture here for me next week. Does the market ultimately finish the breakout of the ascending triangle, and does it do it on a catalyst coming out of earnings? The one thing that is absolutely real in the market is earnings. That is the one thing that is the real conversation we have, is what are these companies doing from an EPS perspective, a revenue perspective, and most importantly, from a forward guidance perspective. And so there's three things I track from a macro perspective on earnings, and I anchor a lot on earnings because it's the real story in the market. We can talk and debate labor, we can talk and debate inflation, we can talk and debate the Fed, we can talk and debate till the cows come home geopolitics and the political landscape. We can't debate an EPS beat. It either beats or it doesn't. You can't debate a revenue beat. It either beats or it doesn't. And you can't debate forward guidance. Either they see a great future or they have concern, and the markets don't hesitate to price that stuff in. And so I think it's extremely important to understand the earnings landscape. And when you kickstart earnings, you typically get with the banks. The banks kickstart it, but it's not just the big time banks next week. Taiwan Semiconductor is a big time AI name next week. They are, I produce a watch list called the AI Gold Rush watch list. They're the number 2 company on that watch list, only surpassed by NVIDIA. That's how important they are to the AI trade. So we got QE trade stuff going on next week with the banks. You got the AI trade catalyst out of Taiwan. And if you understand how earnings works, 3 times out of the last 6 quarters, Taiwan Semiconductor has been a catalyst. Let's see if they can do it again next week. So I would say the most important data next week is the combination of the big money center banks, JP Morgan, specifically Goldman Sachs, Citibank, couple that with Taiwan Semiconductor. That's the most important data coming into the market next week.
Now, question for you, since you mentioned banks and the other company, are you expecting these companies to beat, or are you expecting?
I am. I'm a little concerned with some of the high bar valuations right now coming into the fourth quarter reporting season. But in general, the one thing you understand when you understand how earnings works is companies are very, very good at lowering the bar in earnings. In fact, the average beat against EPS is about 7.2% last quarter. The average, which means we had 78% of companies beat the EPS expectation last quarter. Of that 78, in totality, the average beat was 7.1%. there's nobody better at lowering the bar than Wall Street is. Like, they're not like a high bar, let's overcome a high bar. They're like, let's lower that bar as low as we can. And so I think it goes without saying that you expect them to beat. I expect, like, for example, last quarter, Justin, 90% of these banks beat. 90% of them beat last quarter. And so if they're not beating at 75 to 80%, I'm willing to bet we're seeing some downward movement in price. And that might shock people. Like, how are these companies beating and yet we're going down? Because 90% of the companies beat last quarter, and it's not just me that knows that. And so bar, I fully expect beats on across the board. This will be the 5th consecutive earnings season we had double-digit growth. I fully expect that as well. But that's where the conversation starts. To me, it's not if they beat. To me, it's if they beat 7.1%. Are they beating better than the average expectation? And does that create a growth narrative propelling the banks? Because the banks got a lot of tailwind going into earnings out of the QE trade, lowering of interest rates, and expectation of dovish environment this year. They could have a great kickstart to this year if they come in with great beats next week. I think it's a very important start to the year.
That's a great point. The expectation is to beat, but they have to beat by a certain amount. Now, I'm just curious, do you play overnight options for these earnings, or do you wait for the earnings to come out?
Yes, I do.
Nice.
But if you're going to be buying, if you understand how earnings strategies work, if you don't mind, can I just take 30 seconds just to kind of give you an example of this?
Yeah, absolutely.
If you don't understand how earnings strategies works, it's really about one single concept. And that one single concept is what we call implied volatility. And so what typically happens as you're going into earnings, volatility is going to expand up. And as you come out of earnings, volatility comes down. And if you know how options work, Vega is a very powerful option Greek. And if volatility goes down after earnings, the value of options are going to go down. So as volatility builds going into earnings, you typically get, option premiums that are going up, which means you love strategies like straddles and strangles. When you're into earnings, like, for example, next week, and I might confuse some of the listeners here, but you like strategies like short strangles, inverted butterflies, debicons, butterflies. It's more about understanding how to take advantage of that volatility drop. And so earning strategies are extremely important, but it's really about what happens with implied volatility over time. And yes, I do enjoy a good earning strategy.
I love myself a good lotto, and I've been on the wrong end of an IV crush more times than I want.
It's happened to all of us, brother. You're not alone on that island.
So that's some great insights, and I learned a thing or two right there. But I'm sure a lot of people are there scratching their head about strangles and all that debit spreads. But great stuff, man.
BluSky, come hang out with us in Discord.
Yep.
We'll teach you.
Yep. And just so you guys know, Matt does labs as well, and he goes over full strategies from start to finish. So if you want to learn something, make sure you pop into the Discord. Now, we heard from Matt. Becky, what are you looking for going into the week?
Well, I just have to say, when Coach Matt was talking about options just now, I love how he said he doesn't just open-ended, just take a put or a call the night before and gamble on it, because what he mentioned were all multi-leg option positions where you're hedging that and you're protecting yourself a little bit. So that's a little bit about the education that you really want to get under your belt in terms of trading something as risky as an earnings pop there, because you do have to think about the whole picture, and the IV crush is like a killer sometimes, and the volatility can do the biggest move overnight, and then you can get into some trouble when it's fizzles out during the New York sometimes. And so a multi-leg position is so smart, and not everyone, like you said, Coach Matt, this might sound Greek to some people because they're not the natural first thing you learn in options. So that was such a good example right there of what Coach Matt brings to the table at BluSky, because he has such a wealth of knowledge on all the angles of all these things. So I just really like that you put that in there, Matt.
Oh, yeah. Just continue, Becky. Don't stop.
Hey.
Let's continue.
But speaking of the other economic factors that are going to influence our trading week this week, you guys, has to be tomorrow morning. I think this episode is going to come out on Monday, and you guys, Tuesday morning, bright and early, an hour before market open, is CPI, Consumer Price Index, and that's a big deal for our country and our government position in finance. And so that's something that I always take into factor. I think the big three for me on the Forex calendar is FOMC meeting and rate adjustments, CPI, monthly CPI, and then monthly unemployment. And so this is top 3 for me. So I definitely will set my alerts the night before and then factor that in, get up a little early, see what the action is like pre-market on Tuesday morning for me.
Especially with the Fed coming up just in a week from now. This is the last inflationary data we're going to get before the Fed.
Yep. Now, do you expect it to come in hot or cold?
I don't like to predict. I study the Forex ones and I'm like, we'll see. Because often, if I look into the fundamental data and I'm like, I think we're going to miss and it's going to be negative data for the government, sometimes that means we'll have a bullish as all get out move. And so I'm like, sometimes they're so decoupled that I just want to know that there's going to be a volatility moment coming in. Fundamentally, it might have an impact on the big picture. But intra 5-minute candle and the 1-minute candle, I don't really think that the actual information dictates the direction.
I absolutely love that answer. So many people try to just predict it. And Matt, did you have something to add?
No, I agree with what Becky said. We don't even know what the expectation forecast is for the CPI report yet. We're going to get that in a day or so. So when it comes out tomorrow, when we post this recording, we'll know what those expectations are, and that's what's going to be important to the market. It's not whether or not, from a political perspective, every politician in America, if that year-over-year number comes in at 2.8, the Democrats are going to say one thing about it, the Republicans are going to say another thing about it, and nobody else is going to care anything about what they have to say. For Wall Street, for traders, for retail, for hedge funds, for algorithms, for everybody else, it has nothing to do with those raw numbers. Becky's 100% right. It's all about expectations. The same concept works in earnings that works in economics. It's really about the expectation ball game. Expectations are priced into the market when they come to the market, and then the market has a repricing event when the real information comes out. So I just love what Becky said there, and given what the government has been doing with economic data, I would expect to miss.
Great points by both of you. Now, Becky, I have a follow-up question. Since you are big on rules and psychology and having structure in your trading, do you have rules for trading around these major news events like CPI, like a certain amount of time you won't touch it or anything like that?
Yeah, actually I do. And I developed them by playing with fire earlier in my career, because who doesn't love volatility? For futures traders, we're kind of in volatility. But I, was handsomely rewarded and severely burned by trading the first minute of high volatility news events. And so I no longer trade right when the news hits anymore, because I had just had too many mixed results in wide swath of outcomes. But I will trade once it starts to settle down, at least a couple minutes later. And then I don't always trade. I do have an FOMC strategy that I've deeply studied FOMC minutes and rates. So I do trade that with my regular size, but very, very intentionally and after years of backtesting that day. But on CPI, it's not honestly my favorite. And so I will just trade it if I'm up and I feel coherent enough to make a trade plan. Then I'll trade it with eval accounts only, actually, is my strategy.
That's a great point. I was going to say evals are great for news. And BluSky is one of the few firms where you can actually trade news. So I love popping into the Discord when a big event like that is coming. You see the people go crazy or they quiet. It's really fun to watch. But great insight, Becky, and great role, by the way. Now, last but not least, Coach Riz. Now, Becky took the CPI. So besides CPI, what are we looking at next week?
She beat me to the punch. I thought I was going to get ahead and I was going to slide in there with CPI. But, we're all traders. We all trade in the same circles daily. My trade buddies, really the same thing. CPI, core inflation. What else do we have going on next week? We've got PPI. Like Coach Matt, we've got a bunch of earnings. We got a ton of bank earnings going on next week. We've got, JP Morgan. You've got Bank of America. It's a mixed bag. There's a lot of information there that's going to drive the market in one direction or another. The housing situation, and then we've got tariffs going on tomorrow. It's going to be an interesting week. I think really I'll be looking to swing positions into next week starting tomorrow. Coach Matt knows I've been kind of switching it up, but really that's what I'm looking at is the banking sector. I want to see what banking is going to do, and I'd like to see what the core inflation numbers are for next week. So that's on my radar for Tuesday.
I love you extending time frames, by the way, Riz. I think it's fantastic.
I've heard him starting to say he's starting to swing, and
it's taken a while, but I've gotten him off that 1 minute chart. Let's go.
Yeah, actually, didn't you just open a big Bitcoin swing position, from what I heard?
Yeah, I've been scaling into it day by day.
Yeah.
So what I'm actually doing is I'm taking a fraction of my profits and I'm putting it into Bitcoin, and I'm slowly allocating that options position. So day by day,
Compounded option trade in Bitcoin. This is just music to my ears. I love this.
I love it. Now you mentioned opening swing trades tomorrow, and for you guys watching, that would be the previous Friday. What are you looking to kind of swing into next week to get into this earnings and big red folder news week?
I'm looking for.
Go ahead, Riz.
I'm sorry. Was that for me or Coach Matt?
Go ahead.
That was for you because you said you were going to open some positions.
Yeah, I'm looking at some out the money calls on SPX. So I'm looking for that. And maybe if I can find a good entry on NQ, maybe I can swing along, maybe get into a multi-day long. But I think I've missed that boat already. I think I've missed that boat for this time frame.
Nice. And now this is a question specific for you, since you do live stream in the mornings and stuff. How do you kind of play the news when it comes out? I know like CPI will be before you start streaming, but there's a lot of 10 a.m. Eastern news. Do you actively trade those 10 a.m. news candles, or do you get out of position, or how do you work that?
I'm up an hour before I start in the live session. So if traders, I usually get some traders that will ping me in the pre-market. So I start my morning at least an hour before. And if I see an opportunity for a trade, I will take it before the news event. I will get into it, have my stops in the money, and I'll try to ride it because obviously, I am a swing trader and I am looking for a trend trade whenever I take a trade. So if I can get in on the action early and come into it with the position already, I definitely will be guns blazing.
I love that answer because it's a risk-free trade at that point. You can't lose. Exactly. But you won't enter a trade right before news comes out or anything like that.
No, the volatility will be too great and you'll be too close to you'll be right at the level you would be at when you enter that news event would be right at that where it's either going to go or it's going to dip. So it won't give you enough room for you to let the trade breathe or let the trade kind of work for you. So for that reason, I wouldn't take it right into the event. I'd have to be situated. Position going into it, or I'll wait a few minutes and then let the market settle, get some exaggerated moves. You get some, volatile wicking out of it, and then see where the levels land after that.
That's a great answer. Going in risk-free is great.
Yeah, just to add on to the economic trading events, trading economic reports, when I first started trading, you could be very aggressive, like upon the release of the report itself. Like you didn't have to wait. Like Becky's talking about, I'm going to wait for the volatility to decline. Riz's talking about, I'm going to wait for the volatility to decline. Back in the day, you didn't have to wait at all. But things change, and you got to change with them. And if you're going out there and trying to trade in the immediacy of an economic report, you got to think about your competition for a second. Who is your competition? Because it isn't the other traders. You're trading with robots. That's who you're trading with. Every trader, from Becky to Riz to myself, to everybody on Wall Street, to every hedge fund that is not running a black box algorithm, is going to say the same thing. Wait for volatility to decline. You're going to see an expanded volatility on the release of the news as the market prices in the news. That takes a little bit of time. And then you see volatility decline. And then you see the real conversation technically. And think about volatility like this. When volatility comes into the market, it's like a dam breaking, and all the water comes out, and chaos ensues, and flooding ensues. You don't know the landscape until the water resides. You don't know the technical landscape until the volatility declines. Sometimes that takes 5 minutes. Sometimes that takes 30 minutes. It really depends on the sensitivity of the report. So something like a retail sales event might be pretty quick on that. Something like a CPI report might be 10, 15, 20 minutes from that. Something like the Fed announcement might be 30 minutes from there. But the key point, and I think all of us can agree, is waiting on volatility to decline to see where the true levels are, the true probability analysis. So I just want to mention that as well.
No, it's a great way to paint the picture. And you did mention you get up an hour early. Riz does post key levels in the Discord every day, and they almost always smack. So make sure you show up early. Write these levels down. Even if you don't listen to the stream, write these levels down because they are gold. Now,
Yeah, don't listen to Riz. Just get his levels. Let's go.
Just get his levels and get out of here. Right?
I think we all heard the code there, Justin.
But that's I'm saying if you can't make the stream, write the levels down. But no, that's some great insight.
That was a little kinder, I would say.
A lot of information to digest.
Charge extra for that next time.
Now, welcome to the next segment. This is the segment I'm probably looking forward to the most because as a trader, I have so many questions when I first started trading. So we are getting real questions from real blue sky traders for our coaches. And first up, this is going to be for you, Coach Matt. This is from Trav Hagen on Instagram. On average, when do you see most people becoming profitable?
It's a great question. Number one, Travis, a very, very good question. I think it's a question that everybody asks, especially when you're company involved. Everybody wants to come in, process a trade, get rich quick, make a lot of money, get out of the rat race, live a happy life, yada, yada, yada. Everybody wants that. But you got to give yourself some time here. There's too many people that come into the financial world, want to get rich quick, and the only thing they do is they make every single mistake known to man. They overposition size. They over-leverage themselves. They think they're going to go to the moon. They don't use stop losses. And the only thing they do is they get poor faster than they would ever get rich. And so the get-rich-quick mindset dominates the new trader mindset, and it's a big-time mistake. You got to give yourself some time and distance here. There's a lot of things that you don't know. And the things that you don't know here in the financial world can break you financially. And so you want to focus, and not everybody wants to hear this, but I'm gonna say it because I've been here and done this a little bit. You need to sit your butt in the seat and get some education first. Education plus application is the key to success. And if the only thing you want to do is go pop some call options and go get some hot tips and get out of the rat race really, really quick, it's just not going to work out for you. It's just not. Your probability is going to catch up to you over time. And I didn't say that. The Risk of Ruin stated that. And so it's one thing to keep focus. And what I've always felt, like I've dealt with a lot of people along the road here, and I've taught a lot of people along the way. I've seen traders become immediately successful, guys. I've seen a lot of traders come out of the gates and just do absolutely amazing. I've seen traders take their time. Richard Dent is one of the greatest traders of all time, literally paper traded for 4 years before he felt confident going out and putting his hard-earned money to work. I'm not saying you have to do that, but I am saying that if you are break-even after your first year of active trading, from start to finish in your first year, if you're break-even as an active trader, I'm not talking as an investor, I'm not talking as a cash flow trader, I'm talking an active directional trader. After your first year, you're doing great, like great. You don't have to do absolutely everything in the shortest time frame possible. And so give yourself some perspective, but I would say the average trader probably takes a little bit of time, and I would say it would take at least 6 to 12 months before you even have enough knowledge to even focus on consistency. And so I would say about a year. It would take about a year for a new trader to go from where they're at to where they need to be. Because it's not about one trade. It's about every day. It's about the consistency and application over time. And it's not even it even goes further than that, guys. It's about running your portfolio. Again, if you have $100,000 and you're going out there and making $500 trades and you're like, oh, I just hit my first 3 trades. And it's like, your portfolio's in cash. What are you talking about? Like, you're not running your portfolio. And so making one trade is a different thing than being a trader, in my estimation, and that is running your portfolio. So I would say it probably takes a year. And if you're break even after that first year of active trading, I would say you're doing good.
I think you hit the nail on the head, and I think every trader's journey is different, so it's not a hard answer, but that was
absolutely
a great answer.
I can't say it enough, Justin. Your journey is different than mine, different than Becky's, different from Riz's. We all get certain things, faster than others. But the number one thing is give yourself some time, because once you do understand this market, you're going to dominate this market the rest of your life.
Yeah, and one thing I want to add is don't compare yourself to other people. Once I started not caring about other people.
I need to stop comparing myself to Coach Riz. Because every day that guy makes me want to go sell another or go do another zero DTE, like every single day.
Yeah, those 2,000 percenters every day.
Riz, what strike price you on, Riz? Let me do it too. Okay.
Now, speaking of Coach Riz, this next one's for you because I do see you streaming every day. You do have a pretty clean chart. So I'm curious, how many indicators is too many indicators on your chart?
I've got some pretty sloppy charts. I'm not gonna lie. They are part of my portfolio. I don't normally show those to traders because, beauty is in the eye of the beholder, and what one person can interpret, another person might find a lot of noise in. So really, that's up to traders. Now, there is analysis paralysis, which is a whole different question in itself. But I think if you're able to correlate your trade idea and find your edge in trading, that's a moot point, because you can have a dozen indicators on there as long as your portfolio is green. My normal chart only has about I believe 4 indicators on there. So it's the 9, the 26, the 200, and VWAP. That's all I use. And the levels that are on there are 4-hour levels that I draw on a daily basis. And that's just to show traders that a beginner trader can start with a very simplistic approach to trading and find success in it. And that's exactly why it's there. And it's done like that in a daily session so that I can show a trader that, look, you don't have to buy an indicator. You just got to show up to work every day with the rest of the BluSky team, the way I do, Coach Matt, and the rest of our awesome team do. If you do that, you can also find your recipe for success, but it's all a matter of time and just time in the seat.
Love that. Now, I have a question for you personally. From when you started trading to now, would you say your chart has gotten cleaner, less indicators, less noise?
Absolutely. That was part of the process with me starting to help traders and then starting to begin instruction and explaining the theories and the rationale behind the trades. That when I had more of my older indicators or paid indicators on there, then, I got to substantiate the why, the how much, and everything in between. And when I started teaching and helping other traders, it made me pull that back because it's like, well, new traders aren't going to want to spend, $100 a month on a subscription for an indicator, versus me. I'm already profitable. I'm already making money, so I can justify it. So that made me pull it back. But then that also made me a better trader because then it was like, well, why am I paying for all these tools that I don't even need anymore? I'm being profitable on my own. And then it was like, I kind of learned my own lesson while I started to, teach other traders. So, that's the beauty of helping other people and teaching as you become a better trader is that then you're able to apply that and you're like, wait a minute, you kind of start course correcting yourself and, becoming a better trader. I say that in the Discord every single morning. The folks in our community also contribute to me being a better trader. Coach Matt, Coach Becky, Justin, the team as a whole, all of us collaborating together on a daily has helped me, I know personally become a better trader.
Absolutely love it. I know when I started trading, I had 400 squiggly lines on my chart. It was disgusting. And last but not least, our resident psychology
dirty
coach.
as filthy.
Perfect question for you. I know you could go on for hours about this, but if you had to keep it simple, this is from Trades by Moses on Instagram. How to lock in on discipline.
What's up, Trades by Moses? Thank you for the question because seriously, it's really important. If you are super gray and haphazard with your rules, you're just going to hemorrhage money. You will be the liquidity that other traders take. So I think figuring out what you need to do to lock in your discipline is like an incredibly important question. And for me, what changed for me mostly was people that knew me and were in my close inner circle. Every time I would pull some BS where it would get me in a situation and I would have an outsized loss that I didn't need to take, call me on that. And so I think each trader has to face the music. We each have different tendencies with our bad habits, whether it's revenge or over trading, over leveraging, trading against your plan. But I think when we journal and we go a little introspective, we think about what we are doing to ourselves. We all know what is holding us back in trading. I think it's whether or not we choose to accept it. So I think make it personal. Make it about your choices when you are at your trading system. And then think hard about what you are doing to kind of get into these situations. Speak to a mentor, a coach, air it out a little bit and face the music in your own situation. And then you can really target your behaviors and you can look up information, talk to your coach and mentors, dig into little strategies that you can start changing every day to kind of turn your trajectory on that. And if you can identify your biggest error in your trading and specifically target fixing that, no one is going to become a profitable trader overnight. That's just not realistic. But figuring out your biggest leaking points of your system and then plugging those up and adjusting your system in order to shore yourself up in that department will turn your direction and will start getting you towards that profitability and dial in your discipline. So I think my best tip, if I had to keep it quiet and short, would be to face yourself in the mirror and then specifically dig into your biggest struggle point.
That's so much gold in that answer, and I'm sure you could go on, but I love that, make it personal because everybody's trading journey is different. And that's amazing. And I'm going to look forward to this segment every week because these questions are just amazing. Well, that wraps up episode 1 of Skycast. Huge thanks to all the coaches for coming in and getting this podcast going and getting our first episode done. If you did find some value in this, make sure to like, subscribe, share it with another trader, bring them into the family, and stay tuned because we're not going anywhere and we got a lot more coming in 2026. So until then, trade smart, stay disciplined, and we'll see you next week.